where I'm always impressed by founders and entrepreneurs is where there's a very honest reflection of the challenges and the realities of the market that they're going after.
Hello and welcome to Clinical Changemakers, the podcast that explores vital lessons in healthcare leadership, innovation, and so much more. I'm your host, Dr. Jono. Today on the podcast, we have Dr. Oliver Keown. He is a medical doctor with vast experience in policy, innovation, and the investment space. Dr. Keown is the managing director and head of Intuitive Ventures. Intuitive Ventures is a venture fund looking to accelerate the future of minimally invasive surgery through their inaugural $100 million fund. So let's begin. Dr. Oliver Keown, welcome to the podcast.
Thank you. Great to be on.
Before we jump into your expertise in the venture capital space, I'd love to learn a little bit more about your background and how you found your way into healthcare.
Yeah, happy to share. So my journey started back in the UK. First of all, from a young age, always wanted to go into healthcare. I was kind of passionate about being a doctor, having a career where I could, help patients and the like. I didn't actually know much about what that career would, ensue. I didn't have any family members in it, but I was kind of passionate about that as a path. I think being good at, science and maths was kind of, it was a direction I was pushed into. And I made the move. So I went to medical school and had the opportunity to learn there. And it was kind of early on in that clinical career, I think, because I got more exposure to the career of medicine, that I got quite excited about the entrepreneurial side, kind of how to maybe marriage business with a career in medicine and what that could ultimately look like. And then over the course of some various opportunities along the way, I've kind of really built a career that spanned some of those policy and technology areas with the business and the opportunity to scale healthcare impact in a different way. And that's brought me from policy to clinical practice to now venture capital in the healthcare space.
Were there particular impactful events or experiences that sort of put you into that mindset of what businesses and innovation can do in healthcare?
I think so. I come from a family of kind of small, medium enterprise, SME runners, a variety of small businesses and things. And I think being exposed to that from a young age, working to build something kind of always excited me. That was kind of the baseline of how I saw a career path potentially, pursuing. Layered on top of getting into clinical medicine and seeing, I think, some of the kind of senior clinical figures that had balanced a very impactful career being top of their game in the clinical pursuit, but having kind of side projects and initiatives where they might be working or advising companies, industry, and seeing that kind of marriage of these different worlds was so critical to the healthcare ecosystem, for technology and for driving impact. And I think early exposure in medical school to that really ignited in me a passion to find a way to accelerate how I could achieve something similar, maybe impatiently without spending the 30 years to build, the academic pedigree that one, might have to. And so that brought me into the world of clinical innovation and technology and academia and surgery probably earlier than I had originally anticipated.
And one of your first roles out of the clinical space, you were working as a chief of staff at an organisation. Can you tell me about what that experience was like and what you learned?
Yeah, so I had, as I mentioned, I was kind of looking for an opportunity to bridge clinical practice. So I did practice for a couple of years after medical school, loved it, and had no downsides to it other than I was kind of being pulled in this other direction towards, quote unquote, something entrepreneurial. Not sure what that meant at the time. Had the opportunity to go and work, for the Institute of Global Health Innovation at Imperial, and work directly with the head of that group in a role that spanned really kind of organizing and maintaining the connectivity, the strategy, the direction of travel that the leader of that organization was setting. And it was a huge amount of exposure both to people and networks, but to different content matters, from policy to technology, to clinical need, because there was a real deep integration of the institute within the Imperial College Healthcare Trust, and surgical delivery within the London kind of NHS. So it was just a really unique, pretty fast paced role that gave me broad exposure in a pretty short period of time to different people, different subjects, and offered me, it kind of opened my eyes, I'd say, to where my career could have gone after that.
And what was that transition like? I mean, it can be quite intimidating to move into other fields when you've been studying medicine for a long time and practicing too. How did you navigate that?
So it's funny. I think something that medicine really prepares you for as a discipline, as a course, is actually resilience and change, and getting used to change as being kind of part of the career. I think in the early years for medical school, you're constantly being thrown into unique environments, different clinical settings, different educational kind of frameworks, as well as, in the rotational scheme, certainly in the UK NHS, as a foundation doctor, in your first couple of years after practicing, you're spending 6 months, 3, 4, 6 months in different rotations. And, each time you're jumping into a brand new clinical setting, new teams, new people, new type of working, new subject matter. So I'd say, there's a grounding there that kind of sets you up for flexibility. And I really didn't see the transition into this more administrative role as too different. It was, how can I flex and, into this opportunity? How can I identify the needs that need to be served? How can I add the value that I can bring? Where is there value to be sought? Efficiencies to be gained? All the stuff that I think we're pretty used to doing in clinical medicine, but just applied to a slightly different setting. So that was, part of it. And then, just a lot of learning on the job. I certainly, I'm sure, made lots of mistakes along the way, but it was fun to throw myself into it.
So, in this kind of new environment, how do you make sure you put your best foot forward and be successful?
Look, I think in any job, again, whether it's medicine, whether it's policy, whether it's otherwise, it's about applying the skills that you've learned historically into an environment of people and subject matter or whatever, and trying to identify where one can bring value. There's doing the job that's expected of you, and then you should, hopefully have a sense in your kind of mutual interviewing process, right? You're being interviewed by someone, you're interviewing them. I always think that's really critical kind of mindset to have whenever you're looking for new opportunity. And then it's about just, understanding kind of where you're at and how you can add value. Something I've always sought in any opportunity. I've been very fortunate to work with some fantastic leaders in my career. In any opportunity I'm going for, is there an opportunity to learn? Is there an opportunity to kind of receive mentorship from people that have experience and credibility and networks that can really add to what I will get out of it, but also kind of de-risk the value I can bring to that situation. And so kind of that is also another foundational, I think, element. And so I was fortunate to work with, variety of great leaders, in that role. And then, and then even in subsequent role or previous roles during university and academic projects and things that I'd done. So I think that's an important part of it too.
Were there any particular experiences or projects that you worked on in that role that were most meaningful or perhaps gave you the most growth?
We did some fantastic work that we were very proud of in London at the time, called the London Health Commission. So looking at how to leverage the body of policy within the London mayor's office. Actually, it was a collaboration between Imperial and Professor Lord Ira Darcy that I was working for with Boris Johnson at the time in his office. How can we leverage all the mechanics of policy at a mayoral level at a city the size of London, with a sharp focus on improving healthcare outcomes, and a kind of novel approach, right? It wasn't about strengthening the NHS per se. It wasn't about kind of, funding or structure. It was about how do we leverage policy in its broadest sense, everything from town planning to education to, how you commissioned fast food outlets, across the city, and where you position them next to educational institutions, and how you thought about smoking policies and green spaces, and the like, all towards better health outcomes at a population level. So that was just an incredibly fulfilling project, because again, in my capacity at the institute and working with Lord Darcy, got to see the kind of broadest purview of how one can engage such a rich set of stakeholders across London, often with very different opinions and motivations and priorities, and navigate through to build consensus and alignment towards policy change. And that was really satisfying and fun. And we had some good successes with that effort over at Imperial. So that was one project that was particularly fun.
It sounds like a fascinating project. I think as clinicians, we can often feel like we are kind of at the pointy end of the stick when it comes to policy. With your experiences, I wondered, what would you love for clinicians to know more about policy so we can be better collaborators and contributors?
It's funny, it was kind of exposure to policy was one of my very first kind of entrepreneurial things when I was a junior doctor. So I started working with a startup company that was building digital apps for healthcare systems, and from GP practices to larger hospitals, and was invited to join this kind of digital workshop that the NHS and some very senior bods were hosting around kind of orthopedic patient pathways. And I was the only junior doctor in the room. It was all kind of big wigs of the NHS, and it was me, kind of a young junior doctor, expecting to say very little in this room of like 15, 20 people when I stepped in. And very quickly, the topics and the subject matter and the pain points, it became clear that actually, as a junior doctor, being there on the ground, seeing some of the challenges in the patient workflow, in the kind of waiting times, in access to diagnostics and imaging and all the rest of it, and where there might be opportunities for improvement that digital can have some role in, that actually my voice carried, and those insights were valuable. And that was a real eureka for me as a junior doctor, kind of recognizing, hey, actually my voice can have, although I'm the most junior in this hierarchy of the NHS and the healthcare system, there's insights and kind of translation of insights into something bigger that I could have an impact towards. So I would say that junior doctors can have significant contributions to make, or doctors across the board. I think it's about finding the right forums and places where to kind of have your voice heard and be able to contribute. I do also think that understanding how the healthcare system works, you're not trained in medical school how technology is assessed and how reimbursement, within NICE and all these other things, really kind of moves the needle for patient outcomes over longitudinal periods of time. Med school, you're kind of learning just what is medicine today, but for your career, you need to know how it will evolve over a 20-year period. And I think some of those mechanics of policy, how care is commissioned, how public health intersects with the healthcare system, these things in a shifting kind of healthcare landscape, I think those are all very critical, and would encourage. And I think I've been out of healthcare for or the NHS at least for some years now, so I don't know the latest of education and other things, but I certainly get the sense that doctors are are clued into some of these policy shifts, and they've become more savvy to that, and how it's going to affect their careers and the rest of it, which I think is really positive, because I think everyone in the healthcare system that's there working at the front door should be contributing to that discourse.
I guess what I'm hearing is to encourage people to put their hand up, right? To put the hand up to get involved in some of these types of committees, and to get their voice out so that they can not only understand the system but then influence it. I guess I would also add is that organisations and leaders do need to recognise that frontline staff have a lot to offer. They are the immune system of the organism, or the body of the organisation, and so you do need to listen to them and provide space for those voices to come through.
Yeah, couldn't agree more.
So then I'd be curious to hear about your progression into the venture capital space.
I had, and this is a theme, I think, from medicine to the policy role to venture capital, where there's a similarity. Had spent time looking at the micro. As a doctor, you have to be thoughtful about the mechanism of action of a drug in the context of a patient and the diagnosis that's being made, and how sick they are, and their path towards recovery. But you also need to think about the kind of socioeconomic state and macro of that patient, their family situation elsewhere. Are you going to get them well and they're going to go home into an environment that's only going to cause exacerbation and kind of being back in the same place, Are there opportunities to leverage other resources within the healthcare system to improve upon that? So this idea of going from very small kind of scientific to the big picture policy for me was a layer above that, right? How do you then think about the system and the structural elements of that to, from a healthcare system? And in my role working at Imperial, had the opportunity to collaborate and work with venture capitalists that take it, an even other layer of what is the business model that's driving some of these the economics that are driving the adoption of some of these technologies and kind of the spread and then therefore potentially the impact, especially when the decisions being governed from venture capital is actually supporting those early stage innovations in the hope that they will go on to be successful, both from a patient impact perspective as well as from a financial perspective. So I'd had broad exposure in that role and felt that my kind of passion for science with my passion for this bigger picture thinking would be potentially well served in venture capital, and had the fortune to collaborate with certain colleagues out in the Bay Area from GE Ventures, which was a corporate venture arm of General Electric, and had the opportunity to move out here to the Bay Area to kind of cut my teeth there for on the investing side.
You also now are currently at Intuitive, obviously a company really well known for minimally invasive care, robotic surgery. Tell me, how did that venture start and what was that experience like?
So I'd been at GE Ventures for a period of time, learning how to invest, the approaches, the much deeper integration into the healthcare system in the US and the kind of dynamics there, and had got to know from a structural perspective how powerful corporate venture capital, so corporate venture capital versus traditional institutional financial VC is if it's NEA or Sequoia or Benchmark, these famous firms that you've heard of, using just pure financial dollars to return more money. And they'll have a fee and a fee system approach, but ultimately the primary goal is return more capital. In corporate venture capital, you have a corporate company. In my case, originally it was GE Ventures, but now here at Intuitive Surgical, as you described it, a kind of pioneer of surgical robotics, using capital made available from them to not just generate a financial value and return profile, but also to really drive some type of strategic endeavor. And I can describe more about that, and how we pursue advancing the field of minimally invasive care through our fund. And that the experience at GE Ventures of how to structure, how to align a team, how to make sure that a corporate venture fund is best positioned to achieve that dual aim of financial success and strategic success, was the opportunity to kind of translate that into a blank canvas at Intuitive, at a time when Intuitive Surgical was looking at how to best engage and support that ecosystem of technology developers, of startups, of entrepreneurs that are really driving so much innovation around robotics and digital and therapeutics and diagnostics, and that we could help both accelerate but also bring a bit closer to Intuitive. And so that was kind of the problem statement. And it was a very exciting proposition to come and build something fit for purpose to address that. And so that was that transition into Intuitive 4 years ago, to launch Intuitive Ventures, which we've now had out there for about 2.5 years at this point.
I wonder if we could talk a little bit about just some basics around venture capital, the difference between that and private equity, funding rounds, those kinds of things that sometimes don't necessarily get considered when we're talking about how financial models can support innovation.
So private equity is effectively the entire category of capital being deployed into private companies. So that would be any company that's not a public entity, that's gone through a public listing. So those that you see on, the Nasdaq and the FTSE 100, et cetera. These are companies that are public. Private equity is capital deployed into everything other than that. So venture capital is a sub segment of private equity. It is the earliest stage where you are really providing those high risk, potentially high rewards categories of startups with the capital. Traditionally, kind of how people differentiate quote unquote private equity from VC, even though VC is private equity, you might think of private equity as some of the later stage deals where you are taking more of a majority ownership in a company, potentially creating leverage on that by putting some equity in and raising debt to further enhance the economics of a given deal. So that might be kind of later stage opportunities, and you get some funds that focus more on that later stage, kind of pure private equity, and others that are more on the venture capital end of the spectrum. So it's sometimes seen as a spectrum, but in other ways, it's kind of all the same. It's just slightly different strategies on how to deploy capital at these private stage companies. I think the primer, on venture capital is, it's about deploying dollars into early stage companies to support them in a milestone based kind of fashion, right? So it's aligning as much as possible the innovators, so those entrepreneurial teams, whether they're academics or pure entrepreneurs, that have identified a need and have started to build a technology and a business model and approach to satisfy that. Venture capital comes in and provides the dollars to support acceleration and growth of that idea towards that next value inflection milestone, upon which it being achieved, and I can describe what that could look like. But once it is achieved, that you would then assume that the company will raise more capital to pursue the next level of innovation and milestones, to kind of track towards some grander, bigger impact. And there's a lot of different pools of capital available to support innovation, and venture capital is just one. And I think it's important to remind folks, because the last 2 or 3 years, you'd think that venture capital was the only pool of capital available, and it's not the case. There's plenty of startups, companies that don't need venture capital and shouldn't pursue it for their needs. But where there's really big ideas that have potentially fast growth trajectories, or can sustain the type of pace that venture capital traditionally looks to achieve, there's huge opportunity with the right capital, the right alignment, to support it going forward. It's slightly different between some of the domains in healthcare. So in healthcare, you have traditionally digital health, you'd have biotech and life sciences, you'd have diagnostics, you'd have med tech. These might be entire ecosystems of sophisticated investors and capital that's focused on these different groups. At Intuitive Ventures, we actually cut across all of those and invest in all those segments. But just to give you a sense that a digital health deal and how they raise capital and the pace and the metrics that kind of govern those milestones might look very different from a medical device company that's not going to be revenue generating for 5 to 6 years while they pursue their regulatory trajectory and their development phases and the like.
So for you, what do you look for in a company or a startup to illustrate that you're interested?
There's three main pillars, but it starts off with the need. What are they addressing? What can they articulate, and have they got a very clear strategy on how they are going to tackle something important in healthcare? So our fund, Intuitive Ventures, is focused on, as you described it, accelerating the future of minimally invasive care. So this is the journey for healthcare towards lower impact interventions and better patient outcomes. Robotic surgery is kind of one example of that trend being manifest in a technology company, and we're investing in the next 20 years of that and everything surrounding it to kind of achieve that aim. So what we want first and foremost for our fund is someone that's got a clear articulation, a big need, and is going out to improve a patient outcome. Thereafter, we want to see a team that is qualified or demonstrating the capacity to really deliver and execute on that strategy and that approach. And so that might be that they have a track record. That might be that they're just some super impressive, high energy, passionate, founder that's driving the bus here towards the goal. But that really critical team that are taking a stance there. That there's an exciting and differentiated and hopefully from a IP perspective, kind of protectable technology base that this team and this need is kind of converging on to go tackle the opportunity. And so therefore the technology becomes, a very important pillar. And then the last bucket is that this is, a market that is monetizable and, of a scale and size that can absorb a company that's going to hopefully have a solid trajectory towards value creation, revenue ultimately, down the line. So they're kind of some of the broad buckets with which we look. But I'd say that patient outcome and need and really having an impact on healthcare upfront is the critical first step for us to satisfy.
Are there any sort of common mistakes that maybe startups make in this space that can make them less appealing?
There's such a culture of selling and projecting in the world of startups and venture capital generally. And I think where I'm always impressed by founders and entrepreneurs is where there's a very honest reflection of the challenges and the realities of the market that they're going after to achieve. And there's a realism applied over their grandiose, and lofty goals. And, we all need the lofty goals and the grandiose vision to get excited and energized and, pursue where we're headed. But where you see, entrepreneurs and CEOs sometimes stumble is kind of overselling a vision or overselling a kind of a roadmap towards achieving that, or hiding facts and things that would be otherwise in fairly plain sight to an investor that spends their day in day out kind of exposed to technologies and approaches in these fields. So that's it's maybe a subtle point, but I just think that kind of open and honest reflection can be a really powerful, not just avoiding a negative, but actually can be a really powerful style and kind of approach to really gain credibility with investors.
In the space that you work in, I mean, is it common to have doctors in a role like yours? And what are the kinds of experiences or skills that you bring as being a doctor in this type of role?
So, it's not uncommon. There's certainly plenty of doctors in the kind of Bay Area, especially where there's a lot of concentration of healthcare, VCs and life sciences VCs. It's not the most common route into venture capital generally. The financial training and business training of other, pursuits and careers is what often kind of takes people into this sphere. On my team at Intuitive Ventures, there's 4 of us, and 2 of us are clinicians, but both have spent plenty of time exposed to more business pursuits or technology in a deep way. I don't think there's a single background of a venture capitalist, that is right or wrong. I think my impression is that it's someone that's curious to a significant, just a ridiculous degree, that is a driver of pushing things forward. So not satisfied with status quo, and can kind of execute and operate, kind of use the 2 sides of the brain, be creative and kind of join dots, but also execute and push things forward. That makes a good venture capitalist, and then that kind of foundation being paired with a set of experiences that gives them unique insights from technology or a market or a set of stakeholders. To me, that's a pretty winning combination. I certainly spend a lot of my time applying what I've learned in healthcare. As I mentioned, going small to big, that was a big part of it. The content, the subject matter, but also I'd say the communication piece. Something that's not talked a lot about, I think, about venture capital, that actually has quite a lot of parallel with clinical medicine, is the communication side. In medicine, that bedside manner of influencing a patient's journey and their interpretation of health information, kind of how they experience the journey for their healthcare, how their family experience it. Those things are pretty awesome and unique skills that you're trained in as a doctor. And actually in venture capital, you spend a lot of time having to quite quickly build trust and a connection with entrepreneurs and co-investors and the like. And then you have to kind of test that relationship through a diligence process where you're kind of at odds and you're trying to find out as much, pressure, test and probe. And then thereafter, hopefully once you've done the deal, rebuild and regain that kind of positive momentum, because you're married thereafter and you're kind of on this journey together. And I think that's another piece of clinical practice that's actually something I really enjoyed and loved when I was practicing medicine, that I think you can really put into practice in venture capital.
Obviously, starting a fund in 2019 and going into a global pandemic and a number of economic pressures, I imagine. How did that fare for you, and were there more challenges or opportunities that sprung out of that dynamic time?
Yes, it certainly was. I joined Intuitive in 2019 to kind of build a strategy around ventures, and we were going to our internal stakeholders to ask for the money to kind of launch our first fund just as the pandemic was kicking off, and I was obviously nervous that that would be a natural time to take pause on these strategies and the like when the world is seemingly falling apart and you don't know how the markets etc are going to go. But Intuitive as a company, and this is testament to the leadership who are the entrepreneurs that the engineers and entrepreneurs that actually started the company 25 years ago, who have a very entrepreneurial spirit, and they saw that actually in times of hesitancy in the market, of uncertainty, leaders lean in and they assert themselves and they flex and they find opportunity. And I was just blown away by Intuitive's commitment to doing that at the time of pretty significant uncertainty with the start of the pandemic, and that manifests into really pursuing this venture strategy, deploying capital, getting into early stage companies. I will say, so we got started, and I will say that fast forward 3 months, our thesis at the time of, look, there'll be loads of well priced deals because it's a pandemic and the markets are going to crater, soon flipped into wow, this is the kind of hottest period ever for investing, and valuations are crazy, and this is hyper competitive market. And that was its own kind of set of challenges and opportunities, and we were very and well, we continue to be. We have a high bar for deploying any capital, and when we anchored ourselves in valuations for the few deals that we did do at kind of the height of the market trends that were happening in 2021, 2022, and kind of probably deployed slower than others would have thought that we should be as a new fund, and given kind of the heat around the market. Counter that with where we've seen the more recent market downturn and the kind of economic environment. I think there's opportunity, and there's opportunity in two streams. One is an investor, because valuations are going down, and there's much more sensible dynamics there for deploying capital. But I think more importantly, for the innovation ecosystem and for the opportunity to have an impact in healthcare, the best ideas are bubbling up. People are spending the time to really understand business models, understand technologies, make sure the right teams are driving forward. And so good companies are still getting capital. And I think some of the less value add investors that had played a big role in the valuation upswings and the kind of market froth of 2021, 2022, they've walked away, right? Many of them have departed the scene. And that's obviously creating a challenge for many startups that did receive capital from some of those funds, or that are finding it hard to justify valuations and things now. But I think it means that for this market and for the go forward, investors that can bring a point of view, value add beyond just pure capital, a deep understanding of an industry and a market, that can be a win-win for both the market and for the startups. So I think in this market we're leaning in. We're really continuing to accelerate our strategy. We closed the deal just in the last couple of days, and we closed 4 deals at the end of last year. So we're excited about supporting, because there's still a lot to solve in healthcare.
Yes, the work's not done. It is really interesting to hear from other industries how the COVID pandemic was felt, and how just the ways it's expressed itself, and how you need to be prepared and be able to adapt. I'd be curious to know about the philosophy that's taken when investing in different companies, given potential conflicts of interest or the way that incentives around financial outcomes can maybe distort what the actual gain is from a particular company?
Yeah, no, for sure. So I think of it from kind of the venture structural, and then the areas and themes that we actually invest in. So when we started Intuitive Ventures, and I mentioned that strategic and financial kind of dual goal at the beginning, we purposefully created a structure whereby my team is firewalled off from the rest of Intuitive proper in terms of information sharing, but also that we have a set of incentives that aligns us to the financial success of the companies that we're investing in. And so, from a conflicts perspective, it's interesting because it's been the most powerful lever for us to align and gain credibility with the startups and the entrepreneurs and the co-investors that we're investing alongside, because they know that my investment from Intuitive Ventures, it comes with me and my team being as aligned and motivated to see their financial success. And that puts us at odds in a kind of conflict perspective with actually our corporate parent. But that has been baked in so that, again, the startups know that it's not the overarching goals of the corporate parent in a particular space that is driving the behaviors and the value add and the rationale for pursuing an investment. So it's a subtlety there, but that's been really important for us at Intuitive Ventures, and I think is really best in class to make sure that a corporate venture fund operates and performs its best. On the startup side and what we go out and invest in from a healthcare economics perspective, I think the opportunity in healthcare from a VC perspective is, and this doesn't exist in other industries, there's ripe opportunity to have a kind of win-win-win, right? Great patient outcomes, great financial outcome. And I think if you buy in, and this is certainly what we do, to a view that the world is moving towards better outcomes, lower cost of care, that technology is going to drive some of these shifts in the healthcare system, that pursuing anything other than a better outcome at a lower cost is unethical, or at least is not a kind of sustainable advantage in the long term. And so we have a very clear mandate and philosophy. We call it the quadruple aim. The startups we invest in need to elicit that outcome: lower cost of care, better experience, and a health equity improvement for our deals. And so that's what drives us. And we would shy away from anything that was just increasing cost or creating some kind of perverse incentives to drive a shorter term economic outcome that might be a great financial venture investment, but for us it doesn't align to our philosophy and our mission.
And I'll be curious to hear about how the sort of accountability to that philosophy works.
Yeah, so we have it actually as like a formal filter in the startups that we look at. So it's part of our pipeline and our deal flow process to kind of ensure that we're achieving that bar and making sure that this is kind of something that's headed in the direction of value-based care and these outcomes. And then we have an investment committee that equally kind of holds us accountable for the portfolio and the mission and the direction of travel of the investments that we're making. So I think they're two of the most important levers. And then for me, it's about hiring a team of people and working together with a very clear shared set of values and principles. And at the end of the day, venture capital is a small industry. It's very reputation driven. It's also really cozy and collaborative, industry where a lot of different venture funds and groups actually do proactively syndicate and collaborate on deals and opportunities. And I think, just on the top of my head, it's a shared view right across the ecosystem of quality investors in healthcare on the VC side. And so that's something that we look to as well, who we partner with.
Do you think there are any opportunities in the sort of policy space that may, enhance the access to capital for types of organisations or products that are targeted to reduce inequities?
I think there's going to be a lot of opportunity for that. It's interesting. I spent some time in the UK just in the last week, and the government there is really trying to understand ways to accelerate access to capital and the innovation ecosystem in the country. I think there's always carrot and stick around policies, right? And I think in areas where equity has been lacking from a kind of historical perspective, making sure that from a regulatory perspective, as an example, data sets and other things are mandated to include representative populations these types of things can go a long way towards actually setting a standard, forcing function for the industry. I think opportunities from tax credits and R&D credits and things like that for companies that are proactively going into areas or tackling systemic challenges or issues with business models and startups and innovation can be an intriguing carrot to kind of guide people towards areas that need more attention, more effort. So, I think between those two different styles, there's definitely a lot of opportunity to improve upon. And it's so critical, to the industry going forward.
So you've recently been back in the NHS. How do you contrast the work that you're doing in the US with what the UK is doing?
At the end of the day, I think the successful business models that are, we're excited to invest in the US have broad applicability internationally. And so the companies that we're investing in I would put through a similar filter of their applicability. And many of our startups are actually looking to the UK and other single payer systems and the like to, as a market and opportunity as they build that health economic kind of rationale and evidence base. I think there's, although not in this current market, but with trends for innovation and technology adoption in the US, it means that there's often a kind of quicker uptake and more experimentation with early stage technologies, whereas the bar can be higher in the UK for some of that. We invest in the UK, we invest internationally. I would say the flip of what I just said is that some of the innovation coming out of the UK at an early stage can be so sophisticated as it relates to evidence generation, health, value economics of interventions, of digital tools, of products that you might not see until a much later stage company in the US. And that's really exciting because sometimes there's, we invest in a company called Optellum out of the UK that's an AI tool for lung cancer identification. At an earlier stage, they have a really deep reimbursement strategy and coding strategy, both in the UK and the US, for a stage of development that is much more advanced than maybe similar companies in the US. So there's opportunities between the two. We're excited to invest equally, in the US and internationally, and spending a lot more time in Europe because there's significant innovation here. And often more challenged access to capital. And we think we can bridge some of that.
My final question is just around advice you might have for clinicians who are perhaps considering a transition into becoming an investor or an entrepreneur. Where would you sort of point them to start in terms of learning more and gaining some experience?
I would say build a network. So much of career outside of medicine, I think inside of medicine too, is the network that you've built and propagated. It's the relationships and the knowledge. I'd say, proactively build a network in the areas that you're interested and passionate about, whether that's technology or venture capital or new clinical areas. Get smart. There's a set of skills outside of clinical practice that you just aren't exposed to if you've pursued a pure path clinical career, finance, business operations, kind of learn, be a student of some of these topics that are outside of our kind of day to day. Even if it's just becoming more fluent in the language rather than being an expert in the content, I think that goes a long way. And then find mentorship. I think that's been a big part of my career, and finding mentorship it's kind of a dual relationship. It's not just about extracting value from someone senior. It's about kind of building a relationship, understanding what they're trying to achieve, but seeking it and being a good mentor, being a good mentee to those mentors. So they would be my 3 bits of advice for those, and be open to taking risk, because I think you got to take a bit of risk in your career if you want to make some changes.
Well, thank you so much for your time, Dr. Oliver Keown. I really appreciate all of those insights.
Delighted to be here. Thank you so much, and looking forward to following the podcast and listening to some of your other interviews.
And that brings us to the end of the podcast. If you want to go deeper about any of these topics or join the discussion, visit our website, clinicalchangemakers.com. Now, one small ask. This is a brand new podcast, so if you enjoyed our work, please rate us and share it with your friends and colleagues. Until next time, take care.